Hey, hey. Hey, hey, hey. I'm about to start going over credit, kind of what the sale covers, all of that. So if you guys have any questions, let me know and I'll answer them in this live. I wish I could play music because it's so quiet. Like, it's so quiet. But we'll make it work. So, just need to send something right quick. And I'll get started. I'll make sure I save this live on my page so that if anybody wants to ask questions, you can either ask it on this or ask it in the comments or DM me, however you feel comfortable. That's fine. All right. Sorry, one last thing before I forget. All right, so I got some notes that I'm gonna go over just so I can kind of keep my train of thought in line. And yeah, so let's go over credit, because a lot of people have questions when it comes to that and they don't really understand the credit repair process or credit in general. So I'm just going to go over a brief facts about credit and then go over kind of what the sale covers, and then that's it. So it'll be a quick live. All right, so to start, what is credit? So credit is just, the ability to borrow money or access goods and services with the understanding that you'll pay later. So they're fronting you the money, you pay it back on time, over time. So in general, that's just what it is. Now, the history of bureaus and data furnishing companies. A credit bureau is, a known credit reporting agency. It is a company that collects your personal and financial information, and then the bureau then sells that information to potential lenders, employers, and landlords. So this is not a government. None of the credit bureaus or any of the data furnishing companies are government agencies. They are literally data furnishing companies. So they'll collect all the information from any applications that you ever put in for, any applications that you ever put in anywhere. They collect all the information and sell that information to different companies, and that's how you're either approved or denied, or you get pre-approvals from this information that they're collecting and selling to profit for. And to reiterate, they're not government agencies. They're all for-profit. All credit reporting agencies are for-profit companies. Now, there are three main credit bureaus. That is Equifax, Experian, and TransUnion. All of these, Equifax and Experian, date back to the 1800s, and TransUnion is the newest one, and that started in the 1960s. Now, all of them can report different information, and this is because when you're like, it has nothing to do with you. So say you have an account with a small company, right? You literally have to pay to report information to the credit bureaus. So if it's a small company, they might not have that much money, so they may pay to just report to Experian, or they may pay to just report to Equifax. Whereas a bigger company like Bank of America, Navy Federal, obviously multi-million-dollar companies, maybe even billions. So they're probably going to report to all three credit bureaus because they have the funds to be able to pay to report those items. And just like, companies pay to report negative items, there are ways for you to pay to report positive things. So if you want the information, you can comment on this live. You can DM me your email address and I can send you that information. Now, there are hundreds of data furnishing companies, and the ones that I just listed are just your main three. So that's Equifax, TransUnion, and Experian. Now, say for instance, you are applying for like an apartment or something, and they deny you, but whatever it is that's listing is not on your credit reports. That's because they got that information from another data furnishing company. So if that ever happens, you do have the right to get whatever reports they pulled to be able to, either dispute or, reach out to that company and kind of try to resolve something to get that settled. But just keep in mind that there are hundreds of data furnishing companies, not just three. There are other companies because, like I said, they're for profit. So if you wanted to start a data furnishing company today, you could, as long as you check off all of the logistics of running a data furnishing company. You can start one yourself. So that's that, basically, what credit is, the background of data furnishing companies and credit bureaus. Now let's talk about the components of a score. So there are two main scores that we are aware of. There are several, but there are two main scores. Your FICO score is what the banks and lenders go off of. This is what they are viewing when they're trying to determine whether or not they're going to approve you for a loan or, a mortgage loan, car loan, etc., a credit card. They're looking at your FICO score. You can get this at myfico.com, Experian.com. You're going to go to those websites. When you log into like Credit Karma, CreditWise, any of the other type of credit monitoring sites, those are going to give you your Vantage scores. Your Vantage scores are more for educational purposes. Now, some companies do use your Vantage score. It's kind of rare that they do, but some do. And the Vantage score was a scoring system that the credit bureaus came up with. Your FICO score, is an algorithm that was created by two brothers, and most banks and lenders use that algorithm. Now, to break down your credit score, because a lot of people get confused when they see their credit or think just because they have a 600 that their scores or their credit is bad or anything like that, but that's not always the case. So with your credit score, there are 5 components that make up your credit score. The first component is your payment history. Your payment history is 35% of your score. So this is the most important part of your credit. This alone can literally make or break your credit score. So if you're someone who does not pay their things on time, you need to start doing that, and I guarantee you that your score will start to increase. So how your payment history is kind of determined is by taking all of your payments and all of your on-time payments and divide it by the number of payments you have to create the percentage that you see. So when you do log into Credit Karma, you might see like 85%. And my math is going to be wrong because I'm not thinking about it. I didn't come with that. So you might see 85% payment history. And what this means is, say you had like 10 payments across all of your accounts that were reported, and you only paid 8 of them on time. That's what's going to give you your 85% payment history. The more you pay on time, the more that goes up. But think of it like your GPA. I don't know if y'all have ever, tanked your GPA, but if you have, when once you drop it, it's kind of hard to get it back up. So just keep in mind that if you pay on time, just keep it in good standing. Avoid late payments at all costs at the end of the day. One late payment can drop your scores by like 60 to 100 points. So just make sure you're paying on time. If you think you're ever going to be late, reach out to your lenders. They're more lenient than you think, and as long as you are just being honest with them and communicating with them that you may or may not be able to pay whatever on time, to set up some sort of arrangement so that when they go to report it, they're not reporting it late, or they're at least extending it so that's not affecting you. So payment history is 35% of your score. Your next important factor is your credit utilization. This is 30% of your score. So this is going to be how much of your credit you're using out of what's available to you. So say you have a credit card that's $5,000, you max out that credit card and use all $5,000, you're going to be at 100% utilization. Now, you want to stay at 30% or below with your credit cards. So for a card that's $5,000, you don't want to go over the limit of $1,500. And that's just if you're first starting to get into the swing of things with credit cards. Ideally, you only want to be at the 10% or less mark. But, just getting into the hang of credit cards, starting out to build up your credit, you want to stay 30% or below. And this makes up 30% of your score. So just paying on time and keeping your utilization low will help your scores, increase, or it can tank it depending on what you do with it. Now, if you max out your credit cards, as long as you pay it down to the 30% or 10% mark prior to the statement date, you'll be fine. Now, a lot of people get confused with this because they think that their due date is their statement date, and it's not. It's two different dates. Your due date is just so you don't get a late payment or that interest doesn't accrue on the account. But your statement date is the date that the bureaus report your balance to the credit bureaus, that the lender reports your balance to the credit bureaus. So I don't know if anybody has ever used their card and paid it down, and then when you look on your credit, you see your score went down, and you're like, wait, but I paid it down to 0 on my due date. That's because you didn't pay it down before your statement date, and they've already reported your balance to the bureaus. So keep that in mind. You can just reach out to your lender and ask them, hey, when is my statement date? And just make sure that if you are someone who maxes out their credit cards, but you're good at paying your balance back down, just make sure that balance is down before your statement date. Now, your third component of your credit score is your credit length. This is 15% of your score. Now, credit length is one of the hardest to obtain because it literally just takes time to build up credit length. It is an accumulation of your oldest account averaged with your newest account. That's why whenever you open up an account, sometimes your scores can drop temporarily, is because that credit length is readjusting. The older the account is, the longer your credit length is, or the longer the average is. So ways around this is to not close out older accounts. I know a lot of people, get credit cards when they first start building up their credit, or maybe they got a credit card when they were in college, whatever. They're like, I don't want this credit card no more. Just throw something small up there. I tell people to keep something like a subscription like Netflix, Hulu, or something up there, and just set it up on automatic payments so that that card is still active. It's your oldest account. Great. Now, one way to kind of work around the credit length is if you have a family member or a significant other, someone that is responsible with paying their credit cards on time and keeping their balance, pretty low, you can have them add you as an authorized user, and that will add that payment history and credit length to your score. Most people, will see a boost in their credit score when that happens. So just make sure that person is responsible with paying their credit card on time and keeping their utilization low. If they are late on their payments or they max out their credit card, that will affect your score regardless of you just being listed as an authorized user. Now, this just helps with, giving you the temporary boost, or not even temporary, because like I said, if that's a close family member or a significant other, mom, dad, sister, wife, husband, somebody who's really responsible that that you're cool with, they can keep you up there for however long. They don't have to really remove you. But if, like I said, they let a late payment hit, or if they max out their credit card, that will affect you. Now, it will boost your credit score if they do it right. And, you know, if their length of history is old. So if they had a card that's like, you know, 2, 3, 4, 5 plus years, that'll help you out when you're, you know, rebuilding your credit or trying to establish your credit. When you go to get a mortgage or something like that, they don't really care that that you're listed as an authorized user, because that's showing someone else's financial responsibility. So keep that in mind. You will need to build up your own credit to when you start going into the home buying process. It's not really my lane, but just keep that in mind, because a lot of people will use it for maybe that purpose, but it'll help your score increase potentially. But when it comes to, you know, a mortgage lender actually looking over your reports, they may not consider that when determining whether or not you're financially responsible. So there's that. New credit is 10% of your score, and this is, you know, all new accounts. And credit mix is also 10%, and this is going to be a combination of revolving accounts and installment loans. So you want to make sure you're having loans reporting as well as revolving accounts, i.e. credit cards. So just to reiterate, there are 5 components of a credit score: payment history, credit utilization, credit length, new credit, and credit mix. All of that equals 100%. So when people say, oh, you know, I need my credit repaired and everything, they automatically assume, they say their score is low and they automatically assume that they need credit repair, but that's not always the case. Sometimes you just need to add a credit card. You need credit length. You need to pay down your credit cards. You need to stop being late on your stuff. So I do offer free consultations. So if you're someone who is unsure about your credit reports, you're not sure, you know, how it's reporting and everything, you need assistance, you can DM me or click the link in, I don't think I tagged it on this, but you can click the link and we can go over your reports together, and that's free. It doesn't cost anything, because not everybody needs credit repair. Sometimes you just need to get a better understanding of what's reporting. Now, let's see. We're going to go over how to establish credit. Now, and establish and rebuild credit. Now, 80% of consumers' reports contain errors, and this can lead to several denials and, you know, etc. So, when you are, or if you are considering credit repair, or if you are even wanting to, okay, cool. If you are considering, just DM me or text me, 919-264-7536. If you are considering credit repair, or even if you are wanting to do it yourself, you can, it's not illegal to do. Credit repair is not illegal. You have consumer rights to use and dispute any and all things that are reporting on your credit report. Now, when you're doing it legally, you're using the laws to, you know, get these items updated or deleted permanently. Now, like I said, 80% of consumers have errors on your credit report, and that's because a lot of stuff, that's just like me, you know, taking information that Bank of America sent and I'm typing it in. I might miss a spelling in your name. I might miss your birthday. I might mess anything up. It's possible. We're humans. A lot of things is electronically transferred over into files and stuff like that. So you can have if your name, because my brain's moving too fast. All right. Now, say I misspelled your name, but me misspelling your name is similar to someone else's credit file. I can accidentally add your information to her credit report. So a lot of things can go wrong with, you know, credit reports. A lot of things can report wrong just because it's a system. Glitches happen. Humans make mistakes. It is what it is. companies aren't thorough and everything, but it must be reporting 100% accurate. It's not, it has to be either deleted, updated, and etc. So like I said, credit repair is not illegal. Stop listening to people who say that. They don't know what they're talking about. Now, credit sweeps are illegal unless you have been involved with identity theft. It is illegal to say that you were involved in identity theft and file a police report to get items wiped from your credit. That's what a credit sweep is. You're basically filing a police report saying, hey, my identity was stolen and none of these items are mine. That's what a credit sweep is. That's what people are doing. That's what they're charging you thousands of dollars to do. So that is illegal. Absolutely. And then credit sweeps make it even harder when those items, if and when those items do come back onto your credit report, to dispute them legally the second time around, because the credit bureaus already know now these items are yours, and it's going to be even harder to get the items deleted, even if they are reporting inaccurately. So keep that in mind. I don't know if anybody's like, scrolling and not wanting to tap on because you don't want anybody to know that you're wanting to learn about credit. That's fine, but I'm gonna keep this up. If you are considering a credit sweep, do what you got to do. I'm not here to judge anybody, but just know that it's illegal. And if you have a choice to do it the right way, I would suggest you go that route. Even if you're doing it yourself, you can absolutely do it yourself. But if you don't know what you're doing and you don't have the time to do it, I absolutely recommend that you reach out to a company, because you need to be consistent and pretty thorough to get the results that you want. You can't just send out one round of letters and be like, okay, I'm good. That's not how credit repair works. It didn't take you, 30 days to, it didn't take you 30 days to mess up your credit, so it's not going to take 30 days to get it fixed. Now, in some cases, it can. I have seen people's scores shoot up in like 2 weeks. It's possible, but is it realistic? No. So now, with that said, we're going to go into credit reports and what's actually reporting. So kind of breaking down the credit report and understand what's on your credit report. Now, the very first thing, so when you pull up your credit report and, like your actual credit report with everything listed, I know it can be overwhelming because it's a lot going on, but we're going to break down what's actually reported. So the very first thing at the top will be your personal credit. So this is going to be all of your, I said personal credit, personal information. This is going to be any of the information you've ever put in on an application. So you know how you fill out anything, you apply for anything, any of that information, your name, phone number, birthday, social, your employer, address, prior addresses, all of that you're filling out when you fill out a credit report or a, not a credit report, but a credit application. All of that is what's going into your personal information section of your credit report. So you know how some people will be like, oh, apply with just your middle name, or, apply with your married name, or apply with a combination of these names. It doesn't really matter, because unless you're removing all of the previous information, all of that's just going to add up and go into the personal information. So very quick tip, if you have a lot of incorrect personal information or things that are not up to date, if you're going to dispute your own items, that needs to be your first focus. Remove all old and outdated information from your personal information section. And you can simply do this by writing a letter with your updated information and telling them to delete whatever is old and outdated. So if you have a name change, you want to make sure your actual name is reporting. And to make this easier for you, make sure your ID matches. Make sure your address on your ID matches. This just makes the process easier with updating your personal information. So some people might have difficulty with that. That's kind of a tip. You're welcome. So the next thing is going to be your employer history. I repeated that and I said that in your personal information, but is your employer history. Just make sure that's updated and everything. Make sure only one is reporting, and because it kind of looks sketchy. If you have like 6 employers reporting, you don't look dependable. It looks like you move jobs around a lot. So that can be a reason why you get denied. So make sure only one employer listed. One name, one date of birth, one social, one address, one phone number, one employer in your personal in employer history section. Now, when it comes to your credit history part of your credit report, you're going to have your current and closed accounts from the past 7 to 10 years. It kind of just depends on what state you're in. Payment history. It can be a good way to kind of mix up or have different, like that credit mix that I talked about that made up 10% of your credit, if you don't have any other kind of loans reporting. So it can be a way to add to that and to kind of build your payment history. Payment history goes back 24 months. So however long, it's 3 months. I mean, yeah, temporary. It's something small. I would suggest like something like self-lender, because you pay that over the course of 12 months, 12 to 24 months. You can pay it off early, but I recommend you have it for at least 12 months to build up that credit length and payment history. So it can be a way to kind of start out. It's not anything that's permanent. It's kind of temporary. And it's only 3 months, so I would suggest something like self-lender. But if you got approved, cool, that's great. With your debt to income ratio, that plays more a factor in when you're trying to get a home loan. So that's when the mortgage lender, takes your income and everything that you have to pay and basically determines whether or not you can afford the mortgage loan that you're applying for. That's where that comes into play. I think you may be referencing credit utilization, but that's just your credit cards. Loans don't play a factor into that. But good question though. All right. Now, okay, so things that are reporting in the credit history part will be your current and closed accounts from the past 7 to 10 years, your payment history, current balances, names of creditors and lenders, credit limits or loan amounts, account opening and closing dates, and account status. So if something is currently late, that's what shows. So I don't know if you've ever gone and tried to get approved and you're currently late on something. They see that you're late. So if you're ever currently late on something and the credit bureaus haven't updated your reports or anything, don't apply for anything, because if I was a bank, I'm gonna be like, how are you applying for something and you're not even paying the stuff you already got on time? So just make sure you're not late on anything. You have public records, and this is going to be bankruptcies, foreclosures, repos, judgments, and tax liens no longer report on your credit report. That's something that used to report. If you have an auto loan, that will report. Now, it won't, in the notes that the company can put into the account to send to the credit bureaus, that part might say repossession, but repos, judgments, and tax liens, like evictions, those things no longer report. Apartment balances may report. Now, if you're trying, like I said earlier, if you're trying to get an apartment and you got denied and it's not on your credit report, it's probably because the apartment went through another system. There are some systems that landlords and, you know, complexes use to basically report your information. So if you were evicted or anything like that, they're using that system, or they're pulling court records. So keep that in mind. And then credit inquiries will be something else that reports. Now you have two different types of inquiries. You have your soft inquiries, and that's what you were talking about. This is when you check your own reports, when current lenders, you know, do an update or pull your reports to see, you know, what's going on, if anything has changed, and pre-approvals. So soft inquiries do not affect your credit, and they don't affect your credit. You can see them if you are looking at your own reports. You can see who's pulling your reports, and, you know, you can pay attention to that information. It might be vital to you, but they don't affect your score. You can check your own reports however many times you want. Your score will never decrease because of it. Current creditors checking your reports can be a good and a bad thing, because the good side, it can lead to a pre-approval. So sometimes they'll check your credit and they'll say, hey, you know, this person's score has gone up since they've become a client of ours or a customer of ours and everything. So, hey, now we're increasing your credit card limit by $1,000. That's because they did a soft inquiry. Now, it can work to your, you know, to your disadvantage as well, because if they pull your reports and you're late on everything, they could decrease your credit limit. So keep that in mind. Now, a hard inquiry is when you apply for new lines of credit, and this does affect you. You want to keep this number between, I'm sorry, I sound congested. You want to keep this number between like 3 to 5 a year. When you have multiple inquiries, it looks bad to banks. One is going to decrease your score. Multiple inquiries is just going to decrease your score. Two, you look kind of antsy. Like, you look like you're just so needy for money. And I know, like, you might really need a loan or something, but it just doesn't look good. So try not to apply for things unless you kind of know you're going to get approved. And keep that limit between like 3 to 5 inquiries a year. Now, when you're going to, like, if you're going home shopping, those things are kind of taken into consideration, because you might be trying to like kind of shop around for the best loan options. So anything like within 30 days kind of counts towards that one inquiry. When you're going car shopping, my suggestion is to go through your bank, or to go to a credit union or through a credit union, because you can just get that loan, you'll get that payment outright, and you can just take that check to whichever car dealership and get your car. When you go through a car dealership to get a loan, well, one, they're going to shop around. So if you have not so good credit, they're going to shop around and pretty much get you probably one of those, the word's not coming to me, probably one of those companies that's kind of like giving you a stupid interest rate, and then they're gonna probably shoot you out to however many lenders it takes to get you approved. That's why you might see like 10, 15 inquiries when you go to like those buy here, pay here places or second chances places. It's because they're trying to get you approved by anybody. Doesn't matter who. So my suggestion would be, if you're going car shopping, to go directly through your bank. Kind of maybe get an idea of the type of car that you want. Kind of check them out. Maybe go test drive them. Whatever, you know, do your research. And then apply for that loan amount. And then take that check to your car lender or car place and get your car that way. You also avoid a lot of fees as well too, because when you go through the car lot to get approved and maybe get like in-house financing, they'll add all these types of fees, and you probably don't even know what half of those fees are. And a lot of that is just them beating you over the head. So go through your bank to get approved first. Now, I'm going to talk about how negative and positive items look on your report. And just to reiterate, Navy Federal is good. Navy Federal, I love that bank. I recommend that bank to any and everybody. Navy Federal is amazing. And their interest rates are A1. So, yes, when you get to where you need to be, Navy Federal for your car for sure. Now, so your credit report is basically your financial resume, and it shows how well you pay back money that you borrowed. It's not permanent, and it doesn't account for like your character or nothing. You're not a bad person because you fell on hard times and you weren't able to pay your bills for however long, because it happens to all of us. It is what it is. Life happens to us all. Now, for me, when I look at somebody's credit report, I can instantly tell, if they have an overall good payment kind of, situation going on. I can tell, okay, what happened between these months. It looks like, something went wrong. You were paying on time and then something happened. And it's probably, maybe he lost a job because of everything that's going on. Maybe he had to take on extra bills. Anything could have happened. Medical bills, things of that nature. And I'm going to do another live about how the credit bureaus are going to start removing medical debt from credit reports. So that's going to help a lot of people out, because we all, healthcare is crazy. Everybody doesn't have health insurance. And even if you do, like me, you got to pay high deductible and all that. But anyways, I'll do another live about that, about how they're going to start removing that from consumers' reports, I believe in the summer sometime. So I'll come back and talk about that. But it just basically shows how well you pay your stuff back on time, how well you pay yourself back. Now, it can be negative if it's consistent. So if for 12 months you're late, that looks bad. But if for 2 out of those 12 months you were late, it's like, okay, what happened? You can kind of explain that, whatever. Now, with building credit, we kind of touched on this. A healthy mix typically consists of installment loans and revolving credit. Now, installment loans will be things that you pay back over time. Revolving accounts are things like credit cards. You pay a certain amount each month, and that goes back to your overall credit limit. I don't really recommend store cards. I know that when people are like building their credit up and just being in the store and getting approved, that extra 10 or 20% sounds great in the moment, but I feel like it's a debt trap, because what if you don't want to shop at that store anymore, and now you're stuck with a credit card? I would recommend you starting out with a secure credit card first, and then get one secure credit card, pay that on time for about 6 months. Sometimes you can go directly through your bank and they will, monitor you over 6 to 12 months and convert it to a unsecured credit card. Sometimes the deposit is refundable. So do that. If you aren't able to go through your bank, I do offer a secured credit card, so just hit me up if that's something that you need. So at least one secured credit card, and build to get regular credit cards that have like the perks and stuff, the cash back, the traveling rewards, things like that. I don't recommend store cards. Like I said, I think they're a debt trap. So I would push you to get a regular credit card, because that way you are able to spend your credit card on things you have to pay for anyways. And that's the key when it comes to credit cards and using them. That's how you make sure you don't max out your credit card. You're going to spend your credit card on things that you already have to pay for anyways. Don't get your credit card and think that that's extra cash. It's not. That's how the companies get you. And that's how they make their money off the interest. It can be tempting to, max out a $10,000 credit card. But how long is it really going to take you to pay that down? Your monthly payment's going to be like, what, maybe $100, and you're probably going to pay that $100 a month, and every month you pay that, the interest of the other $9,000 is added back, so it looks like you're never paying that balance down. So don't max out your credit cards. It takes your scores, and it takes you forever to pay it off. And then meanwhile, the banks are just racking up with interest. The interest that's like 24% interest rate on that credit card, they racking up, and they're just making money off of you maxing out your credit card. So don't do that. Just spend it on things you have to pay for anyways. Like, if you have a larger credit card, you can throw larger bills up there, but pay it off. Don't treat it like extra money. You can put your mortgage up there. You can put your rent up there. You can put, car payments and stuff up there. Set it up on automatic payment and just set the payments up to draft out your actual account to pay them off. That's just a tip. It's what I tell everybody who becomes a client, or if I do like any type of credit analysis with you. Now, the quickest way to build your credit is with on-time payments, paying down your credit cards to 30% or less, and a trade line. And this can be primary, so you getting a new credit card, you becoming an authorized user on an aged account with somebody who you trust to pay their bills on time, and doesn't max out their credit cards. Okay, Rita, you can inbox me and we can talk about it. You can inbox me, we can talk about it. I don't recommend store cards. Become an authorized user, and then there is rent reporting. That's something that's new that kind of just rolled out. Some apartment complexes may offer that, so you can reach out to them. They offer it for like as little as $5 that I've seen, and I'm associated with a company too that reports it for like $2 a month. So basically, they'll report your rent payments to your credit reports to all three bureaus back to as far back as 24 months. So you can instantly add 24 months of on-time rent payments to your credit reports. So those are kind of ways that you can quickly build up your credit and kind of go in the positive direction with it. So, quick ways to build up your credit. And again, if you have any questions or you want to go over your credit with each other or anything like that, inbox me. We'll go over it. That's free. I'll explain what's reporting, how it's affecting you, and everything like that. Now, let's talk about the importance of credit. Now, the main reason, people want good credit, is so they can learn how to leverage it or leverage it. And leveraging is just an investment strategy of using borrowed money, specifically the use of various financial instruments or borrowed capital to increase the potential return on an investment. So, when you have good credit, you're able to receive money from financial institutions and possibly, use that money. The key is to take that money and to flip it. So you're making a return on the money that was given to you. Then when you have good credit, banks are more likely to give you large chunks of money. When you have not so great credit, they don't want to give you anything. When you are trying to build business credit and you want to personal guarantee your own business credit, you need your credit to be pretty decent. There is a way to build up your business credit without having it attached to your social security number. But the quickest way to build your business credit is to link it to your personal credit. So, a few ways to kind of, leverage credit is by buying a home or investment property. This gives you generational wealth. Leasing a vehicle, you could put it like on Turo or something, let it passive income. And using personal lines of credit to start business. So having good credit, can just kind of take you in a direction of financial freedom, basically. Now, it can affect the type of life you live too, because it kind of determines where you live, the type of car you drive, and the type of schools you can attend. So good credit is, you know, more than just a number. It also depends on what's actually on your reports. And if you have any questions about that, you can inbox me, or you can text me, or respond, you know, leave a message on the video or whatever. My company, Working Queens, and you can search it on Facebook, Working Queens Financial Solutions, or go to workingqueens.com, or just DM me. Offer free consultations. So that's where we're kind of going to go over everything on your reports to see what's reporting, how it's affecting you. If you have any questions, you need some advice. If you have a goal, you're not sure how to get to that goal, this is what we'll talk about during that consultation. Right now, for my services, I'm having a sale. It ends tonight in less than 12 hours, 11:59 p.m. The sale will be over. Right now, you can sign up for $25. That's just the enrollment. Yes, there's a monthly fee. Okay, $25 is not going to get you credit repair. But you can sign up for $25. And we'll start processing your files and everything. It's a monthly fee, $49 a month. So if you have any questions or you want to sign up for the program, you can click the link. Well, you can go to my page and, you know, you should see the flyer. You can click the link on the flyer. You can DM me if you have additional questions. But that sale does end tonight at 11:59 sharp. No exceptions, because I know every time, it happens every single time. Every single time I have a sale, this is the first one this year. I don't know when I'm going to have another one. But every single time I had a sale last year, and the year before, and the year before that, when I ended it, I had somebody, it's always more than one person that inboxed me that's like, is the sale still going on? Nope. Nope, it's over. And when I first started doing it, I was really lenient. Like, okay, I'll sign you up. But nope, nope. Because y'all see the flyer. Y'all see this live. So go sign up if that's something that you need. If you know you need credit repair, go ahead and sign up. If you want to have a consultation before you sign up, you know, hit me up before 11:59. So you can get signed up, because after that, you're going to have to pay full price. So that's pretty much all I wanted to go over, kind of what credit repair is, what it entails, how to build it, what it consists of, and the sale that's happening. So I'll be back, I don't know, maybe next week, maybe this weekend, and I'll talk about some new things that's rolling out. One of the things is the credit bureaus are going to start erasing medical debt from your credit from consumers reports. So that's going to help a lot of people, because majority of Americans have medical debt, and the fact that it's reporting as collections or charge-offs is kind of hindering people from moving forward with certain things. And for a lot of people, that's literally the only negative thing on their report. So once those are removed, a lot of people will be able to get approved for homes and get approved for whatever it is that they're needing to, whatever goals they have. So I'll be back either this weekend or next week to talk about that. If you have any questions, like I said, DM me. And yes, the sale ends tonight at 11:59 p.m. Bye.